This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Apple's influence. The company was the talk among investors and on Wall Street today. So why does this one company matter so much?
Spec homes, they're back. Why homes are once again being built without a buyer lined up in advance.
And the cyber threat, what businesses and individuals can do to keep from being hacked. All that and more tonight on Nightly Business Report for Wednesday, April 24th. Good evening, everyone. Susie, you know, Apple's numbers were out yesterday, but the company was all the talk today. It was the day of reckoning.
Yeah, whether you were in your office at the water cooler and trading posts on Wall Street, yes, everyone was talking about Apple today. Its stock, its earnings, its iPhones and iPads, and even its competitors. So why is everyone so obsessed with Apple? Whether you know it or not, chances are some of your money is invested in Apple, now the second most valuable company on the planet. And today, Apple was one of the most heavily traded stocks in the S&P 500, 34 million shares traded hands. John Fort takes a look at why Apple is such an important company to Wall Street and why it matters to just about all of us.
Even if you don't own an iPhone and have never set foot in one of the glass-rimmed stores, Apple's a stock you should care about. Why? Well, because it's owned by so many 401ks and pension funds, for one. Nearly 2/3 of Apple shares are owned by institutions, including CalPERS, New York State Pension Fund, and BlackRock. Not only that, but Apple's stock movements influence some widely held index funds and ETFs. In funds like the QQQ, which tracks the biggest stocks in the NASDAQ, Apple makes up more than a 12% weighting, nearly twice that of Google. That's enough to make Apple's stock moves a concern for the whole market.
A significant percentage and overweight percentage of the returns in the S&P 500 over the last 2 or 3 years have been because of Apple stock. So if Apple swoons, it is going to impact many indices, and it is certainly going to impact many fund managers that perhaps were overly confident about the prospects for this technology company.
Apple's product cycle has a big influence for better or worse. Take the iPhone. Before it was introduced 6 years ago, smartphones looked like this. Now here's the latest HTC and Samsung phones, touchscreens and nary a keyboard in sight. If you owned BlackBerry, Nokia, or Motorola shares over the past 5 years, Apple became a pretty important stock to know about. The iPad 3 years ago? A big launch for Apple, sure, but it was even bigger for HP and Dell, which have seen their PC businesses implode. Now there's a new reason to care about Apple: cash. Apple boosted its dividend 15% yesterday to $3.05 per share, making Apple the biggest dividend payer in the world. It also authorized a massive buyback, so the total cash return to shareholders will total $100 billion by the end of 2015.
One of the problems is, yes, Apple is managing to lower growth expectations, but it's doing so because it is now suddenly losing share. The smartphone market is not saturated, but Apple now finds itself losing out to more diverse and better priced Android alternatives.
CEO Tim Cook acknowledged on the call that Apple's growth has slowed and its margins are coming down a bit. What's a lot less clear is whether investors will continue to embrace it as a growth stock or relegate it to value territory. Either way, it's going to be an important story to watch for more than just Apple stockholders. For Nightly Business Report, I'm John Fort.
And later in the program, we will look at the new strategy Apple rival Samsung is employing as it tries to take an even bigger share of the smartphone market.
More proof today that Ford Motor is running on all cylinders. The automaker said today it posted its best quarter ever in North America. Overall, though, Ford earned 41 cents a share, 4 cents more than estimates, and revenues revved up 10% thanks to the rollout of new models. The strong numbers came despite huge losses in Europe. Now, earlier today, I talked with Ford's chief financial officer, Bob Shanks, and asked him what Ford has to do to keep that sales momentum up for the rest of the year.
Well, Susie, I think we have to do what we've been doing. I mean, our business is a product business, and I think we've got great products that we have just introduced. We've got more coming this year. We are managing the cost of the business well, keeping our production in line with demand, and working the top line. So I think we just continue doing that.
So, Bob, I mean, why all the demand for these cars? Is it because Ford is making better cars, or is it that people just need new ones, given that the age of the vehicles on the road are so old?
Yeah, that's a very important point, Susie. There is a strong replacement demand element behind the industry growth in North America, and certainly that's part of the story. But clearly, the consumers are responding to the products that we have out there. A lot of that was around the new Fusion, the new C-Max, and the new Escape. And that part of that story is fuel economy. It's the fun-to-drive element of the vehicles. And they see value in the price positions that we have in the marketplace.
Well, as popular as Ford is with consumers, it's Toyota that is the #1 automaker in the world. What can Ford do to change that?
Well, we just have to keep working our own One Ford plan, which is working and is having great success. We've seen the fruit of that in North America. We're growing dramatically in Asia-Pacific, Africa, and we expect great things from that part of the region by mid-decade. We have a restructuring plan in place in Europe to bring that back to profitability by the middle of the decade. We've got a plan, and it's working. We just keep on track with that, and the company will move forward.
To what extent is the weak Japanese yen making prices on Toyota Corollas and Camrys, for example, more attractive to American buyers? And do you think a price war could shape up in the U.S. car market?
Well, we don't know yet, because it's only over the last 9 months or so that the yen has depreciated to the degree that we see today. It clearly has given the Japanese competitors an advantage not only here but around the world. So far, we've only seen very small selected areas where they may have leveraged that in terms of price positioning in the marketplace. Historically, they haven't used that in terms of heavy incentives. What they've generally done is to put new content onto vehicles and to not price for that. So that's the thing that we're looking at very closely, and we'll be watching that going forward. But so far, just some few signs that they're starting to take advantage of that.
Let's talk a little bit about China. Ford sales and market share is increasing there, but GM still dominates that market. What do you have to do to catch up?
Well, we just have to keep working our plan. We've presently got 7 plants under construction in Asia, Pacific, Africa. 7 of those are in China, 2 in India. We had a 30% increase in our share in the quarter in China. We actually wholesaled more Focuses in the region, most of that in China, than we did in either Europe or in North America.
All right, well, China is also on track to be the biggest market for luxury vehicles like BMW, Audi, Mercedes, very popular with the Chinese. Is there a place for the new Lincoln to win over buyers of luxury cars in China?
Yeah, we think so. We've announced that in 2014 we're going to introduce the brand into China. Team's already working to prepare for that. And we do think that we've got the products, and we're going to have a consumer brand experience and a dealership experience that we think will set us apart from the others.
Ford shares hitting a bit of a speed bump today. They were down slightly, but the stock is up almost 3% so far this year.
Well, Ford shares, like a truckload of other stocks today, ended slightly lower. Still, the major averages did finish the day mixed. Orders for long-lasting so-called durable goods were softer than expected in March, and investors took a kind of ho-hum view of mostly positive earnings reports before the bell from Boeing, Eli Lilly, Northrop Grumman, Dr. Pepper Snapple, Whirlpool, and several others. When all was said and done, the Dow was down 43 points, dragged lower by a nearly 6% decline in Procter & Gamble after P&G lowered its outlook for the rest of the year. The second biggest decliner was AT&T, down 5%. Its CFO described the economy and business climate as challenging, even though he confirmed his company's 2013 outlook. NASDAQ and the broader S&P 500 both closed a tiny fraction higher.
Some encouraging housing news. Applications for new mortgage loans rose 1% last week as rates on those mortgages ticked lower for the 5th week in a row. A 30-year fixed-rate loan is now averaging 3.65%. Most of those new applications came from current homeowners refinancing existing loans, but at a cheaper rate.
While many of those current homeowners are staying right where they are and taking advantage of lower mortgage rates, many would-be home buyers are snapping up newly constructed houses almost as quickly as they're being built. And that's driven some home builders to do something we haven't seen since the housing bust, building houses first on spec and then trying to sell them. Diana Olick has more on this old-new trend.
Homebuilder Stephen Paul says he should have no problem selling this 5-bedroom home in a Tony suburb of Washington, D.C. He built it without a buyer, something he hasn't done much of in the past 8 years.
We'll be monitoring the resale inventory of listings for the last 18 months. And we've watched that precipitously drop over that period of time. And we realized that there's going to be a demand for homes where people want immediate deliveries, and there are none on the market.
So-called spec building was more than just a 4-letter word during the housing crash. It was a risk few were willing to take. But the story now is no supply. Home listings in March were down 17% from a year ago, according to the realtors. And some of the big builders say they're actually holding back construction because they're facing land, labor, and material shortages, and because they want to keep prices strong. That has others thinking the time is now ripe for spec.
I think the biggest competitive advantage that builders have right now is that they have product. And with existing inventory so low, they need to take advantage of the fact that they actually have something to sell.
McGrath says big builders like Lennar and D.R. Horton have had the greatest success in spec recently because they know exactly where and what to build. Paul says he's targeting high-end, high-volume markets for most of his spec, doing mostly tear-down infill projects. That's where the risk could bring the greatest rewards.
So we've been monitoring other builders, and we've been noticing that they have had a reluctance to start building specs because of hesitation and concern about the market. But we see it as an opportunity.
He also says he's starting to see buyers who had damaged credit, even lost their homes to foreclosure 3 or 4 years ago, now back and able to buy again. That can only mean more demand amid this limited supply. For Nightly Business Report, I'm Diana Olick in Bethesda, Maryland.
As for homebuilder earnings, Meritage Home reported a strong quarter with new orders up 35%. Big builders Pulte and D.R. Horton out with their results tomorrow and Friday.
And coming up on the program, Schwab hit by a second cyber attack in as many days. We'll ask a security expert how businesses and individuals can protect themselves. But first, let's take a look at how the international markets closed today. In our market focus tonight, investors were busy all day analyzing a new batch of earnings. We begin with Qualcomm. The chipmaker reported after the bell profits in line with estimates and revenues ahead of expectations. It's a big supplier of chips that are used in Apple devices and Galaxy phones, but with concerns about a slowdown in smartphones, Qualcomm said it expects profits in the current quarter to come in lower than analyst estimates. Shares rose 1% in the regular session, but they tumbled more than 4% in after hours.
Zynga reported profits of $0.01 a share, while Wall Street was expecting a 4-cent loss. That's the good news. The not so good news, the social game maker issued a very sharp warning about revenue for the current quarter. Shares were up more than 5% before the close, but then they dropped more than 10% right after that earnings release.
First Solar led the S&P all day after selling its largest solar farm to the Southern Company and Turner Renewable Energy. Southern CEO said the purchase more than doubles its solar capacity. First Solar gained more than 11% today, and year-to-date is up more than 45%.
And near the top of the Dow today, Boeing reporting first quarter profits up 20%. Boeing took no special charge for those 787 Dreamliner problems and confirmed its guidance for the year. Investors cheered that earnings news and the expectation that the FAA will clear the Dreamliner for passenger flight later this week. Boeing gained more than 3% today and is up more than 20% this year.
Yesterday's fake Associated Press tweet, the one that sent the markets into a temporary tailspin, escalated concerns about corporate internet security and about how safe all our online accounts really are. Today, a victory for the good guys. Police in Australia arrested a man believed to be a high-level member of the computer hacking ring called Lose Security. It's part of the larger group known as Anonymous, which has claimed responsibility for cyber attacks on the CIA, Sony Pictures, and even public broadcasting service. Meanwhile, online brokerage giant Charles Schwab admitted its website was the target of a second cyber attack in as many days, denying its clients access to their online accounts for several hours. The company says the problem has now been resolved and Schwab investors can safely trade again. Well, with so many of those Schwab clients using mobile devices to conduct trades, another worry on everyone's mind: how vulnerable is your mobile phone to being hacked? John Herring, a self-described hacker and now CEO of Lookout, it's a mobile security provider, demonstrates just how simple and quick it is to gain access to your mobile accounts.
Here is a whole host of spoofed emails. In this case, what we've got is an email from a colleague, and it says, hey, why don't you check out this game? I have lots of programs that get sent to me. I'm sure you have lots of documents that get sent to you.
It says lookout.com, so you think it's from a coworker.
Exactly.
Or in this case, I think it's from a coworker.
And this did not come from the coworker. Okay. So if you were to open this file, and it's really simple, just hit install, and it'll install the application, and you now open it. And this is a game in this case. It might be a document, it could be a video, depending on the type of exploit that's used. The device is now hacked. So we've now hacked into the device, and it's taking the control is now in my hands.
Our next guest says preventive measures are the key to protecting your identity in the cyber world. He's Michael DuBose, Managing Director and Leader of Cyber Investigations at the security firm Kroll. Good afternoon, Mr. DuBose. Good to have you with us.
Good afternoon. Thanks.
You know, we just saw how easy it was for somebody to hack into a phone. In the past 24 hours, Schwab has been hit twice. Should I, if I do my banking and my brokerage work and my trading online, should I think twice about doing that?
Well, you should be very careful. Clearly, well, first, mobile devices are kind of the new frontier for hackers. Wherever people choose to do their financial banking, hackers are going to follow. They follow the money, and where money is on mobile devices, they will try to hack mobile devices. But I think overall, in terms of financial services industry, I think you need to be very careful. You need to be careful about your passwords. You need to have strong passwords. You need to change them regularly. You also need to be careful about who is on your computer, at least the computer that you're using for your financial services transactions. If you have a family computer and a personal computer that you use, you're better off using your personal computer because you really don't know where your kids are going online and that type of thing. So there are a number of different measures you can take to protect yourself.
And because, excuse me for interrupting, because you don't know where other family members may have been, that may have introduced viruses or malware. I have to guess that even though we hear a lot about the hacking attacks on a Chase or a Wells Fargo or just in the past 24 hours on a Schwab, that the greatest point of vulnerability is probably the home computer. Number one, is that correct? And number two, do the kinds of off-the-shelf security programs, the anti-malware programs that I can buy, do they do the job?
Right, you're exactly right. Just like with a company, the weakest link in either a network or in a financial transaction involving a home computer is the end user, is the home computer itself. And so the antivirus software or the security suites that involve antivirus software, anti-spyware, and firewalls, they are essential. You need to install them. They need to be updated at least daily, automatically. But unfortunately, the reality is that depending on what study you read, only about these antivirus programs are only about 25 to 40% effective in actually detecting the malware that we're seeing today.
And so how do I get the remaining 75% protection that would seem reasonably important to me?
I think a lot of that has to come through very, very careful user habits. In fact, when friends ask me how should they conduct online banking, to the extent that they can afford to, I recommend that they buy a very cheap computer and only use that computer for their financial transactions. Don't use it for email, don't use it for online browsing, anything. And just as a way to reduce the risk.
Two quick questions. Do you do your banking online and your financial work online?
I do, yes.
And so what would the 3 key things that you would recommend to our audience be to protect yourself against cyber threat?
Right. Well, one was what I just mentioned, which is you really do need to have a security suite of antivirus software and spyware. The other is to have very strong passwords and to change them regularly. The recommendation is that you not have the same password for more than one account. Practically speaking, nobody can keep track of all those passwords, but at least have unique passwords for those accounts that are most sensitive, for instance, your bank accounts or things like that. And I think the other thing is to reduce the use of those computers on which you're conducting really sensitive banking transactions.
Michael DuBose, thank you very much. Michael is Managing Director and leader of the Cyber Investigation Unit at Kroll Advisory Solutions. And still ahead, Best Buy teams up with Samsung. Will the new strategy be a win-win for both companies? First, though, how commodities, treasuries, and currencies fared today.
Just a day after Apple's earnings were released, rival Samsung is looking to get a bigger piece of the smartphone market by teaming up with big box retailer Best Buy. The question is, will the strategy pay off for both companies? Courtney Reagan tells us more about the partnership and whether it'll work.
Today in New York City, the CEOs of Best Buy and Samsung Electronics officially launched the new Samsung Experience Shops that will be in 1,400 Best Buy locations by June. If the shops are successful, this deal could be a big win for both sides. Samsung is attempting to catapult past Apple's smartphone dominance by taking advantage of Best Buy's huge physical footprint. Best Buy, meanwhile, hopes to capture a little bit of Samsung's cool factor. 200 of these shop-in-shops are already serving customers, just in time for the highly anticipated release of the new Samsung Galaxy S4 smartphone.
The feedback is extremely positive. With the early results in terms of sales are also positive. Too early to quantify and be definitive, but we are pleased with what we're seeing.
Don't forget, Best Buy also sells Apple products in its stores, but these new Samsung shops will be more than twice the size of the existing Apple shops, with an average footprint of 460 square feet. And Best Buy is planning to put the Samsung Experience Shops in twice the number of locations as Apple's shops. The Samsung Experience Shop is all part of Best Buy's Renew Blue campaign to reinvigorate its consumers, its employees, and its vendors. But some question whether or not Best Buy will be able to remain brand neutral and not heavily favor vendors that have a larger presence in its retail stores.
The remuneration of the blue shirts is unchanged. So they're not incentivized for a particular vendor or another. Their focus is on customer satisfaction and the overall success of the store.
As the debate over how brick and mortar stores will deal with rising internet sales continues, the CEO says with its blue shirt expertise and online price matching program, there's no reason for consumers to walk out of the store without purchasing. Though Best Buy is joining other retailers in reducing its physical footprint, Jolie contends its real estate is an asset and not a liability. In this case, offering vendor Samsung a 1,400 shop retail footprint in just 5 months' time. For Nightly Business Report, I'm Courtney Reagan in New York.
You know, Susie, in China, they basically, Best Buy follows this model in their subsidiary there, where every vendor has a kiosk within their store staffed by their own employees, and it is working very well. So you go to the Samsung counter, you meet the Samsung employee. You go to the Sony counter, you go to the LG counter, and you meet their people there, and they sell you the products, and they rent the space to those companies.
The American consumer habit is do your research in the stores and then go buy it on the internet.
Well, that's what that's been hurting them in a big way. Well, finally tonight, Benjamin Franklin is getting a makeover. 2 years after the initial target date, the Federal Reserve will put out a totally redesigned $100 bill in October. The new note will be chock full of features designed to stop counterfeiters, including a blue 3D security strip right down the front of Benjamin there, and a disappearing holographic Liberty Bell.
More colorful.
I hope they keep the crack in the Liberty Bell.
October 8th, that's when they come out. I expect you to have a couple of those hundreds. You can give me some of them. That's Nightly Business Report for tonight. I'm Susie Guerra. Thanks for watching.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll hope to see you back here tomorrow evening.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Susie Guerra with a Nightly Business Report news brief. Charles Schwab was the target of a second cyber attack in as many days, denying clients access to their accounts. The online broker says the problem has now been resolved. Earnings were mixed today. Good news from Ford, Boeing, Whirlpool, and others were offset by weak data from AT&T and a lowered profit forecast from Procter & Gamble. Well, those earnings and weak data on March durable goods orders weighed on the stock market. The Dow fell 43 points, but the Nasdaq and the S&P 500 both ended a fraction higher. Applications for new mortgages rose 1%, mostly through refinancings of current loans. And the $100 bill is getting a security makeover, including a new 3D ribbon and holographic Liberty Bell. Be sure to tune into Nightly Business Report right here on your public television station.